Let's begin with the legal definition of fraud. Fraud is defined as a false representation of a matter of fact, whether by words or by conduct, by false or misleading allegations, or by concealment of what should have been disclosed that deceives and is intended to deceive others so that the individual will act upon it to her or his advantage. Breaking down that definition, it is a deliberate misstatement. It is intentional. It may be a misappropriation of assets. It may be fraudulent financial reporting. And it is almost always a deliberate concealment from others. Looking at those a little bit more specifically, a deliberate misstatement. Fraud is deliberate, meaning it is not a mistake. Fraud is designed to benefit one party while harming another party, which might be the company or could be an individual or even other individuals. But keep in mind, when we speak to fraudsters and we identify the fraud that took place, and we identify how it was concealed, we identify the various process steps involved in it, it's very, very clear that fraud is absolutely a deliberate attempt to mislead another party. Fraud is intentional. Fraud is not a mistake, again. It is almost always planned. It does not happen by accident. So when we hear fraudsters defend themselves by making an attempt to suggest that this is something that they were just involved in accidentally, that is almost never the case. Because the fraud must be planned, because it is deliberate and intentional, it's difficult to use a defense that this is simply an accident. In many instances, fraud is a misappropriation of assets, meaning the theft of assets, whether it be cash, inventory, equipment. When internal controls are poor, theft can be concealed by manipulating the accounting records, meaning somebody can have access to not only the recording of the fraudulent transaction, but the same access to the theft of assets. Normally, this can take place when there is a lack of segregation of duties. We see in most frauds, but specifically misappropriation of asset frauds, they occur due to both a lack of segregation of duties and in some other cases because of collusion between two or more parties. But the issue of a lack of segregation of duties is very critical. We see this more so in smaller companies where they don't have the resources to have the appropriate checks and balances or the appropriate internal controls. But it can also happen in larger companies, especially as a byproduct of the recent recession, where there is downsizing in many cases in accounting departments. So when we have a lack of segregation of duties, we run significant risk for the misappropriation of assets or the theft of assets.